It's a new business week. Good morning and welcome to Business Morning. I'm Chimeze Obi Iwago. Thank you for joining us. We kick off from the global oil market as Brent price heads for $80 per barrel amidst supply concerns as parts of the world sees demand pick up with the easing of pandemic conditions. Brent crude was up this morning 1.5% at $79.23 a barrel, having risen a third consecutive week through Friday. U.S. oil added 1.5% to $75.09, its highest since July after rising for a fifth straight week last week. Rising gas prices is also helping drive oil higher as the liquid becomes relatively cheaper for power generation. Caught short by the demand rebound, members of the Organization of the Petroleum Exporting Countries and their allies, known as OPEC+, have had difficulty raising output as underinvestment or maintenance delays persist from the pandemic. China's first public sale of state oil reserves has barely acted to cap gains as PetroChina and Hengli Petrochemical bought 4 cargoes totaling about 4.43 million barrels. India's oil imports hit a 3-month peak in August, rebounding from nearly 1-year lows reached in July as refiners and the second biggest importer of crude stocked up in anticipation of higher demand. And Channels Television and the United Nations World Tourism Organization are now partners in accelerating development in the tourism sector by promoting robust conversations as the sector recovers from the pandemic. The Memorandum of Understanding was signed yesterday at Abidjan, Côte d'Ivoire. Take a listen. As the world celebrates the 2021 World Tourism Day with the theme Tourism for Inclusive Growth, it's an opportunity for two giants to collaborate, come together and fight or move the sector forward in Africa and the world. We see a coming together of Channels Media Group and the United Nations World Tourism Organization, represented by the chairman of Channels Media Group and the Secretary General of United Nations World Tourism Organization. They meet in Abidjan here in Côte d'Ivoire, the host for the 2021 World Tourism Day. It's now become known that every 5 years the event is hosted in an African country, and so for 2021 it's being hosted in Côte d'Ivoire. The relationship between Channels Television and the United Nations started in August 2015 when the media group first formalized its collaboration with the United Nations to promote its efforts and projects and enhance conversations around the Sustainable Development Goals. The relationship is formalized as they sign the dotted lines and agree, after discussing, of course, on terms that would guide the relationship between United Nations World Tourism Organization and Channels Media Group. And the essence of this is to foster development in the tourism sector.
And nice friendship, because again, African continent needs to be more known outside of and out of the continent, and we see a lot of potential to support African tourism, to develop African culture, and we are starting, and I'm sure that via channels we can communicate better with
This is like the icing on the cake for us, because I love tourism. I like to travel a lot. And then the fact that we have to reset the button for tourism around the world, in the sense that global tourism has taken a hit arising from the pandemic that happened last year. So you rest assured that you have a very good partner in us, Channels TV, and we'll do everything possible to make sure that your objectives are met, using us, as a channel to reach the world with your message. So
thank you. I will add one more.
It's a new dawn as this relationship is set to broaden discussions when it comes to tourism sector and enhance the developmental efforts in the sector, not just in Africa, but in the world, and it will always be memorable because it's the 2021 World Tourism Day celebration. So reporting here from Abidjan in Côte d'Ivoire, I'm E. John Mekwa for Channels Television News. Well, in the meantime, as it is said there, today is a World Tourism Day. And of course, the theme for this year is tourism for inclusive growth. Interestingly, because Cote d'Ivoire is the host for this year's event, and we hope to have our correspondent there, John Mekwa, join us in the course of this program to bring us up to speed with the issues and development there as the world celebrate tourism. And of course, from tourism development to human capital development, human capital is said to be the central driver of sustainable growth and poverty reduction. The World Bank, in its 2020 Human Capital Index, recently released, ranked Nigeria 0.36 points in its Human Capital Development Index, indicating 0.01 basis points compared to 0.35 recorded in 2018, putting the country in the low human development category. But can Nigeria really do better than this? Let's have this conversation with the Executive Director at the Africa Youth Growth Foundation, Dr. Arome Salifu. Good morning, Dr. Salifu. Thank you very much for joining us on the program.
Good morning. My pleasure to be with you.
Now, oftentimes, a lot of people argue about the criteria deployed by the World Bank in coming up with reports such as the Human Capital Index. What's your own opinion about these reports?
Yeah, thank you so much for the opportunity to share my position with you on the reports. First and foremost, the World Bank Human Capital Development Index report often deploy universal best practices and methodology to arrive at any conclusion. And of course, it's uniform, it's actually universal and it's uniform to all the countries concerned. And so there's no opportunity whatsoever for misinterpretation or ambiguity. The report released again shows the level at which Nigeria is performing in terms of human capital development. Human capital development basically measures the level of investment and, of course, improvement of the population in terms of the knowledge, in terms of the skill, and the health acquired over time or experienced or exposed to over time. In the case of Nigeria, the performance has really been on the decline for various and several factors that are well known to us. I think at this point in time, there's need to actually accelerate development in the area of human capital. We cannot, again, overemphasize the importance of human capital development and its implications to our national development, our national growth, and of course, even our competitiveness, both economic and of course, social competitiveness, both at the African level and of course, at the global level. So it's quite unfortunate that Nigeria is currently having this decline in terms of the measurement of human capital development. Yeah.
Yeah. Now, looking at the 2020 report, which is the latest released by the bank, it noted that much of the hard-won human capital gains in many economies over the past decade is at risk of being eroded by COVID-19 pandemic. And just last week, the National Bureau of Statistics, in collaboration with the UNDP, released a report on the impact of COVID-19 on the economy, saying that 20% of full-time workforce in Nigeria lost their jobs as a result of COVID-19. How would you tie these two reports together?
Yes, the two reports are complementary and they are basically saying the same thing differently and of course at different levels. If you reflect on the impact of COVID-19 on the economy and of course on the population, you would realize the fact that the impact is better imagined. For example, almost all the sectors were totally shut down. From hospitality, tourism, hospitality sector to transport sector, to industries. Almost virtually every sector, was completely shut down, and that of course has significant implications, on the the level of productivity and, of course, engagement of the people to be able to move and to do what they are supposed to do on daily and routine basis. So it's not surprising to get the report that well over 20% of jobs, lost in the, as a result of COVID-19. Of course, we're already trying to recover, and we hope that the recovery process would be accelerated, through appropriate measures by the government and other actors to see that the people are not unduly exposed to further hardship and difficulties as a result of COVID-19. But again, I want to say this, that globally, the measures being put in place to see that every sector is being reactivated accordingly should be adopted and deployed also in Nigeria. The level of vaccination in Nigeria currently to open the doors for people to go back to their normal businesses as quickly as possible is not quite encouraging in Nigeria. We still have shortage, and of course, even people having misinterpretation as regards the efficacy or otherwise or safety of the vaccines. And so I think it's important to really, deploy all necessary, platforms and avenues to enlighten the people to actually accept, and accommodate the vaccines, and to see that beyond just being able to resume or to recover quickly in Nigeria, but that Nigerians are able to also connect, with the rest of the world as quickly as possible in terms of the recovery process. Yeah.
Now, the World Bank report calls for urgent action, particularly among the poor and vulnerable. For a country such as Nigeria with limited fiscal space and competing priorities, what policy choices would you advocate to improve human capital in Nigeria?
Well, thank you so much. Unfortunately, we have a very difficult situation in our hands as a country. This is actually describable such that we ought not to be in this position if we had gotten our leadership right, for many years, in retrospection. We missed it severally, as a country. For instance, human capital development is orchestrated on the basis of your investment, in the educational sector, in the health sector, and how that has also helped to translate to improve skills and knowledge of the people, and how they have been able to earn better income and be able to support themselves, their families, to have better living conditions as a result. That, has over the years been relegated. Our level of investment in education, for example, has been deplorable. Just to give specific instance, our budget, for some time now has not, grown beyond 7% of the total budget, given to educational sector. And you want to imagine, how you want to, grow your human capital with that level of investment or commitment, from the government side. And just comparable, you cannot compare that to Ghana, for instance. Ghana with a population of how many millions? And then Ghana is having a much higher level of, investment in education, compared to Nigeria that has population of over 200 million people. And then you also want to reflect on the fact that our population is growing, but the level of investment in our population is not there's no connection, between the level of our population growth and the investment in human capital development. We have currently over 30 million Almajiris out there on the street, 30 million. So you want to ask, what is the government position and how have they been able to prioritize, educational development, for this population? Because, if you talk of human capital development, it begins, its foundation from even nutrition for kids, for children, and if you have Almajiris on the street, they struggle on themselves, on their own to feed on daily basis. So nutritional wise, they are already, on the deficit. And then you also recognize the fact that with bad nutrition or with deficit nutrition, their cognitive power becomes depleted drastically. So the ability to recognize, the ability to understand, the ability to comprehend, the ability to be able to interpret analysis, and of course different kind of academic engagement will become even more difficult, if at all they are even opportunity to be in school. So in terms of the connection between human capital development, nutrition, and educational performance, all of these are linked. And then you also want to reflect on the fact that even for those who are able to go to school, how many of them are able to finish primary school? How many of them are able to finish secondary school? How many of them are able to go to university? Out of those who are able to go to university, how many of them have access to quality education in terms of training, in terms of teaching and learning environment? And then you have all manner of challenges that are befalling our educational system that is better imagined than what I don't know, that you have a system that you don't have conducive learning environment, you don't have conducive teaching environment, the level of infrastructures are completely defaced, and yet there's no declaration of state of emergency in this sector, and then you cannot be competitive out there in terms of labor market job and other areas of opportunities. Again, you also have to look at the fact that even for the numbers that are in the university or in the higher institution, there's huge mismatch between what they read and what is likely to be needed out there in the labor market. Currently, we have about 68% job graduate mismatch. What that means is that you have over 68% of Nigerian graduates graduating without corresponding job opening or opportunities for them in the labor market. So they struggle on their own just to do anything whatsoever, to just have something to eat or have something on the table. That is not supposed to be. Where there is connection between industry and the educational sector, you have to also see that whatever priority you are giving in terms of learning or courses that you expose the students to are on the basis of the demand generated by the labor system or by the labor sector or the job market. So you have this huge gap contributing to the gulf already created by the COVID-19 and of other structural unemployment and out there long before now. So you need to have a system that can feed the educational sector with appropriate data, with appropriate information as regards the kind of skill needed, the kind of knowledge needed currently in the labor market, so that the educational sector can respond accordingly to also design those courses and make sure that the students are enrolling in these courses, so that the students, as they are graduating, there's already a pool of job opportunities for them to to tap into. That is not done as we speak in Nigeria. All of this put together aggravate the current level of deficit we have, in our employment sector. I mean, in terms of employment generation, poverty reduction, and so on.
Right. You've spoken so much, about the education sector, of course, which is part of what the report highlighted, talking about the current education and, of course, health outcomes, how it's going to shape the productivity of the next generation. But we would also like to have your thoughts on how you think the private sector can actually contribute to this. But we'll do that after the break.
Okay.
Welcome back. You're still watching Business Morning on Channels Television, and we're looking at human capital development in Nigeria, and we'll still have Dr. Arome Salifu, Executive Director at Africa Youth Growth Foundation. Thank you very much, Dr. Salifu, for sticking on. Yes, we're talking about how the private sector can actually support. You did mention education, and of course, health is also important. These are the two key factors that the World Bank report highlighted that the outcome of these would shape the productivity of the next generation. So how can the private sector contribute to both education and health?
The private sector remains the engine room of any economy. They serve as the major drivers of economic growth, and they also serve as enablers, of employment generation and poverty reduction. Within the context of this conversation, I would recommend strongly that the level of information sharing is not encouraging enough between the government and the private sector, and also that not sufficient to guarantee shared responsibility between the government and the private sector. We have very boisterous private sector in Nigeria. The private sector account for significant, volume of GDP and of the other related outputs, in the country. And so the private sector in Nigeria remains very critical in terms of how best to contributing to development of human capital, employment generation, and of course poverty reduction. Now, you look at the private sectors, importantly as, being on the demand side of the entire, conversation, because essentially the private sector would be interested in the quality of people they have to hire, the ability of these persons to be able to deliver on their expectations, and of course to be able to justify whatever payment they are giving to these persons in terms of the output and the level of performance on the job. And so the private sector is more business-minded as compared to the government sector. But this is actually one important aspect of their responsibility to see that as a country, we do not have undue unemployment, leading to high level of insecurity, instability, in the country, thereby making even their own business environment very difficult to operationalize or to be able to dwell. So it's important, perhaps, that the government, partners strongly with the private sector to, one, generate the appropriate data needed to support government planning. For example, we have industries, we have companies, they have specific numbers of persons they need to be able to produce a certain volume of goods or services, as the case may be. And where they have deficits, where they have gaps, these gaps should be, reported and, to the government, to allow the government to plan accordingly or respond accordingly, both in terms of policy, in terms of other possible interventions. And of course, they also need to see to how they could, express their challenges to the government. For example, under COVID-19, in several, climes, governments are really, coming up with a lot of interventions, for the private sector to recover quickly and to be able to facilitate, job recovery, in these companies. And so Canada to US to UK, they are giving out, a lot of resources to the private sector, to the companies to be able, one, to keep jobs that are on their payroll, and two, to also be able to, even generate new, jobs for those that are not even employed before COVID-19. So these kind of interventions are needed locally in Nigeria also. I know Nigeria, as a country, the government is doing its best possible to see that private sector is supported, to see that the jobs that are currently being handled by Nigerians are retained, and that new jobs are also created for potential new employees of these companies. However, I think it's just like a drop in the ocean. If you want to interrogate the level of interventions, by the government and the performances of these interventions in the last 1 or 2 years, you want to agree with me that it's not, performing, the way and manner we all anticipate that these interventions perform to quickly, support and accelerate job recoveries and, of course, poverty reduction among the people. Maybe perhaps the level of corruption also not helping matters, because it's one thing to have good intention, it's another thing to see this good intention through and to see that they are properly deployed and actualized, as expected. So we have a pocket of challenges here and there as a country that also make the private sector pretty difficult to do what they are supposed to do, to be able to be on the same page, in terms of government, priorities and interest. Yeah.
All right, thank you very much, Dr. Salifu, for sharing your thoughts with us this morning on the program. Well, let's just hope we get it right eventually. Dr. Arome Salifu is the Executive Director at Africa Youth Growth Foundation. The Senate last week approved the 2022-2024 Medium-Term Expenditure Framework and Fiscal Strategy paper. President Muhammadu Buhari had in July forwarded the 2022-2024 Medium-Term Expenditure Framework and Fiscal Strategy paper to the National Assembly for approval. In approving it, the Senate maintained the crude oil benchmark price of $57 per barrel for 2022, as proposed by President Muhammadu Buhari, higher than the corresponding benchmark of $40 for 2021. Joining us now to look at these and other specifics is an analyst with Chapel Hill, Durham, Mustafa Wahab. Thank you very much, Mr. Wahab, for joining us on the program. Good morning.
Good morning, Chimege. It's always great to be with you.
Right. Now, going by the medium-term expenditure framework approved by the Senate last week, the federal government hopes to expend 13.98 trillion naira in 2022. That's slightly higher than the amount approved for 2021. Is this a realistic estimate considering Nigeria's economic challenges?
I think it is. The number is quite not necessarily realistic, but I think it's something that needs to be done, right? I mean, I was listening to your analyst, Dr. Arome. I don't know if I can pronounce the name correctly.
You did.
So it was basically, pushing a lot of agendas regarding how government is not spending enough, right? Especially in the education sector, right? So obviously, some of the nice development that we would like to see in Nigeria, we can't get them by miracle. We have to spend our way towards, those developments. Be it education, as Doctor, earlier mentioned, infrastructure, road infrastructure, energy infrastructure, and whatnot. We have to spend significant amount of money, to sort of get towards, those sort of levels, right? And again, I also feel like, for a size of Nigeria's economy, I think we're not spending enough, to justify, the magnificent population and obviously growing, economy. We're not spending enough, right? If you convert this 13 trillion that is being budgeted for 2022, convert it to today's dollar, that comes to roughly 31 billion in dollar terms, right? That's, significantly smaller compared to $130 billion that the South African government spent, for 2020, budget in South Africa. So again, we're not doing enough as far as spending is concerned. Obviously, the key concern is usually revenues, right? But again, 13 trillion, I think is sizable, is overly optimistic, but it's an expenditure target that we should strive to meet.
Right. Now, we have seen the situation, of course, Nigeria. You talked about revenue. We have seen a continued acceleration in expenditure relative to, revenue, which implies higher budget deficit. Now, do you think Nigeria can ever achieve a balanced budget?
Balanced, I mean, that's too much to ask. I think last year we had a deficit of up to 4 trillion, and this year, deficit is in excess of 5 trillion. And so obviously FGN is trying to plug that deficit with about 4.9 trillion in borrowings, both external and domestic borrowing. I suspect, some of the key questions a lot of Nigerians ask, and obviously analysts in Nigeria ask today is whether or not Nigeria has enough room to continue to rack up borrowing, right? It's one thing to say that we need to spend a lot. The next key question becomes revenue. How do we generate enough revenue to spend, as much as we need to sort of, see that massive wave of economic development coming into Nigeria, right? So the key question is, do we have enough room, to sort of continue to rack up borrowing? I think the answer just basically depends on whose side of the divide you are on, right? So if you speak to any government agent today about the burgeoning debt profile in Nigeria, what you typically hear is that they will quickly point you to, the low debt to GDP ratio level, which is currently at 31%. 21%, right? If you add, DMOs, non-DMOs debt into that, which is roughly around 15 trillion, that debt to GDP ratio comes to about 34 trillion. Even at that, that is still way below the regulatory limit of 40%, right? Versus, currently that we have 34% or 21% levels, right? Which basically means that there's still a lot of rooms for them to continue to rack up borrowing. That's typically the kind of justification that you hear, from any government agent, especially from the Ministry of Finance, right? But the key question is, debt to service ratio, it's now an alarming level. And if anybody is worried about that, I think the worry is actually valid, right? Last time we checked, as of Q1, we saw that debt service to revenue ratio in Nigeria is now currently at 93%, right? Which, is quite elevated. But for us to for me to give you some sort of comfort, right? What I sort of did was to sort of break that down into, the amount of money Nigeria generates for FX earning versus what we spend in terms of servicing foreign debt. Then we look at it from what we earn in Naira versus what we spend as far as servicing domestic debt is concerned. And FX debt service versus Naira earnings is around 92%, versus 44% for FX debt as a percentage on FX debt service, right? Which basically means that, we're still, what the picture I'm trying to paint here is that for every $1 Nigerian government generates, close to 44 cents of that will go into debt servicing versus, for every 1 Naira we generate, roughly 92 kobo of that goes to debt servicing, which basically means that there's still a lot of room for us to continue to rack up, foreign borrowing versus domestic borrowing. And I suspect that the FGN is also aware of this, hence the reason why they are pushing a lot more towards, commercial Eurobond and also other concessionary borrowing from the likes of World Bank and the rest, right? So again, what we're trying to say here is that, on the Naira leg, we seem like we're already overstretched. But on the other leg, from the dollar perspective, I think that Nigeria can do a lot more, sort of diversify that, debt burden between Naira and the dollar. That's the reason why I think that, we should be able to fund a 5 trillion deficit, which obviously is one of the key reasons why, one of the key demand for Nigerian growth to actually surpass, the historical levels that we've seen in the last 10 years.
Right. You talked about debt to GDP. Of course, I agree. Oftentimes, the government will tell you, well, when you talk about debt to GDP, we're good. And the figures coming out from the debt management office says 22%. But when analysts like you, do your own calculation, we're having about 35%, which is way above what the federal government is actually calculating. Who is deceiving who here now?
So let me just break it down so that you get a clearer picture, right? Nobody is deceiving anybody, right? It's just that FGN is basically, people who knows that FGN has some other liability with the likes of AMCOM, for instance, net liability with the CBN, power sector tariff shortfall. Right, these are a huge amount of loan that still, that is still, claims on the FGN, right, or across, the government of the federation. Hence the reason why you tend to see debt to service ratio that is quoted by analysts way higher than that of the government. So the breakdown is that debt that is DMO related is domestic and external debt. That comes to roughly around 33 trillion, right? And the ones that are not DMO related, the non-DMO parts, basically comes to around 15 trillion. So all in all, if you check Q1 public debt for Nigeria, you will be seeing a figure of 33 trillion. But by the time you had all these non-DMO, debt liabilities, right? That figure comes to around 48 trillion naira for Nigerian government. Hence the reason why FGM will quote 21% and analysts will quote 34% as debt service. Debt to GDP ratio.
Okay. Now, quickly before I let you go, of course, the revenue projected is about 8.36 trillion naira, with assumption of oil production of 1.88 million barrels per day for 2020, and of course, oil price of $57 per barrel. We are seeing oil price heading to $80. And I think Goldman Sachs is projecting that we might likely see this head to $100. Now, how realistic are these given Nigeria's commitment with OPEC production cuts?
I see. You've already answered the question. Really. I'm just going to enunciate on what you said. Right now, I heard you quote roughly $80 per barrel for crude oil, I think at the start of your show this morning, right? And I would have been excited, right? But again, Nigeria is committed to OPEC, right? I think they've now lifted our production to around, quota to around 1.5 million barrels per day. Which is quite, disappointing, right? Compared to, what we've seen in the past few years. Today, back once upon a time in Nigeria, if oil price is hovering around $75 to $80 per barrel, it's typically a good period for Nigeria, where you sort of see the dollar, flowing around, liquidity at the FX markets, it would be sizable. But we're obviously seeing the reverse, in this period, and that's basically strictly because of, that production quota. Right. So what we've seen the NNPC or the FGN did in recent time is that they've submitted a bid, to the OPEC and its allies that, look, you guys would have to find a way to raise our production, benchmark from what we currently have, right? Which is quite a smart thing to do. We're aware that UAE actually did that recently. They raised their production quota from 3.2 million barrels per day to 3.8 million barrels per day. If the same can be granted to Nigeria, then we can start to see the impact of these higher oil prices on Nigeria's fiscal position, right? But I think the government is conservative enough. Oil price is currently at $80 per barrel. They are projected $57 per barrel, right? So I think the impact of this higher oil price should help limit, that negative downside from production level. Hence, I think, FGN's revenue projection from the oil leg is actually realistic, and they should be able to do anywhere between 90 to 95% of that.
All right. Thank you very much, Mustafa. I guess that's your first name? Mustafa.
Yes.
Thank you very much. We do appreciate your time on the program, and have a beautiful day.
You too, ma'am. Bye.
Bye. Now let's do the opening calls to the market, and we have Anita Edit there. Let's kick off with the conversation, the FX market. How did trading go last week? Anita, good morning.
Yes, good morning, Jimmy. Well, it was quite a mixed bag, if I should call it that way, because at the fixed segment and at the forwards, at the spot and at the forwards market, it was quite a mixed performance there. Down at the FX spot markets of the FX market. The forwards market was down by 50.57%. Other futures and the FX derivatives was up, but in all, total volume there was up by 5.77%. But when you take a look at the investors and exporters window, total value there was down by 3.95%, just call it about 4%. At $761.71 million, in contrast to what was the value the week before last week. Now, for the Naira, it was down, it fell by 0.13% at 412 Naira 48 kobo against the dollar. Of course, this is for the Nigeria Autonomous Foreign Exchange window of the FX market. So it's just a mixed bag, and we don't know how it's going to turn out this week, but we'll keep our eyes out for that. Now, let's move over to the Treasury bills market. It was bearish sentiment there, but let us have Dimeji Obasa, who is a Treasury sales at Access Bank, to give us more insight into the fixed income market as well as the FX market. Thank you for joining us, Dimeji. Good
morning. Thank you for having me.
Yes. Now, this is another week, the last week of September, and then, of course, we will be having a public holiday on Friday this week. But before that public holiday, we expect that the CBN will be rolling over more than 111 billion naira worth of maturities, and then of course we'll be mopping up a combined 145.77 billion naira inflows from the OMO maturities. So how do you expect the FX market as well as the fixed income markets to perform this week?
So for this week, with the FX markets, we expect relative stability. We expect the CBN to continue the interventions for SME and invisible transactions, as well as for FPIs looking to repatriate their funds. For that, we expect in the I&E window that transactions will be executed at the 412 levels. For the fixed income market, yes, you're right. We have significant liquidity coming into the system this week from the OMO maturity, but I mean that will most likely be mopped up by the CBN floating another OMO auction. However, we also have some coupon payments on some bonds this week, totaling about 107 billion. We are likely to see, bullish sentiments, as market participants will be looking to reinvest those coupon payments. So overall, for the fixed income market, we might see, bullish sentiments this week.
Okay. So thank you for that. We'll keep our eyes out for the fixed income market activities later today. So now let's move over to the equities market. We had, after, last week was kind of a mixed bag also. We had a tussle in between the bear and the bull, but in the end, this is what the market turned out to be, plus 0.05% upward, which means we gained about 9 billion naira, and that, of course, came especially on Friday, where we had a more than 45% increase in value, and then, of course, a 28.2%, 49.5% increase in volume, and then 28.2% increase in value week on week. Then, of course, the month-to-date loss has been moderated to about 0.7%, while year-to-date loss is 3.2%. So, of course, this is how the market printed last week. Then, of course, if you take a look at the sectoral performance, banking and consumer were in the red, industrial goods were up, and, of course, we had lots of profit-taking, particularly from Tier 1 lenders, which is what caused the market to be in a depressed form. But, of course, we'll be looking out for how it turns out on the side of investors, whether they will be taking on the lower prices of equities, of course. So now to give us more insight on what to look out for, let's join Charles Fakruga, who is the Chief Executive Officer of Supra Commercial Trust. Thank you for joining us, Charles.
Yes, thank you for having me.
Okay. Now our market, the domestic stock market, it had been in kind of a seesaw movement. So what do you expect the market to turn out this week?
Yes, well, as you have said, looking at last week, we had 3 days of negative trading and just 2 days, Thursday, Friday, of positive trade and increase in volume. Now, looking at what we're already experiencing in the market right now, at about 10:30, Boa Cement is down. The market is already down over 1%. And what investors will expect this week? Cautious trading from investors. And of course, then actually today, the market is obviously going to, what is really called, going to close in negative territory for what we are seeing right now. So for the week, investors should just be very cautious, trade cautiously, give mandate to their brokers, the mandate that they have done their research, because we are going to be seeing a lot of sales pressure for the week. So investors should just be cautious.
Okay, Charles. Okay, Charles. Okay, thank you. So now we'll keep our eyes out for the remaining few days left in September for the stock market. So that was Charles Fakruga, Chief Executive Officer, Supra Commercial Trust. So, Chimize, well...
It's not looking good there, what Charles is projecting. Profit taking coming back today, Monday, after that bullish run we saw on Thursday and Friday. But that's what market is all about. It's just the dynamics of the play. So We're keeping it. Thank you, Aniti. All right, we take a break, and when we come back, of course, we do our opening call to London. And Britain's petrol crisis has deepened, forcing ministers to suspend competition law to help oil companies to target petrol stations running dry after days of panic buying. Let's bring in Juliana now for more on this and others. Good morning, Juliana. Well, I guess Brits are still suffering this petrol crisis. Now, after a meeting with oil companies and retailers on Sunday, Business Secretary Kwasi Kwarteng agreed to temporarily exempt the industry from the Competition Act of 1998. How much has this move been able to soothe the nerves of the people?
Good morning, Chimeze. Not much yet. There are still significant queues outside petrol stations right up and down the country. According to industry insiders, about 50 to 80% of British forecourts are running empty at the moment, which is a major surprise because late last week when we were discussing the update from BP, this appeared to be on the surface a manageable crisis. But panic buying has kicked in, and now we're seeing queues of up to miles long. On social media, there have been pictures of people punching each other at the petrol forecourts, desperate to get themselves some petrol. And this is a huge issue for Prime Minister Boris Johnson. As you said yesterday, they made the pretty swift decision to stop competition laws. So basically, big firms can talk to each other, share information, find out which petrol stations across the country need the petrol the most. So that's what's taking place at the moment. There's also a contingency plan that is going to be rolled out over the next few days, which is Operation Escalin. So the British government will be drafting in the army to drive these HGV lorries, and that obviously is the issue here. There is about 900,000 shortages of HGV drivers. We know that the Home Secretary has drafted 5,000 temporary visas to try and get some of these drivers from across the continent. But of course, Europe are also facing their own driver shortage. So it is a really significant issue here in the UK, and it does lead on to other issues, some dubbing them the British winter of discontent.
I see. Well, I guess you'll have more updates on that for us later in the day on Business Incorporated. Anyway, with a number of data expected this week, coupled with the petrol crisis, of course, how are the markets kicking off the new week?
Well, yeah, surprise, surprise, the FTSE seems to have ignored what's going on at the petrol forecourts, the 8,000 petrol forecourts across the country, and it's opened up in positive territory. I think really, obviously, all European stocks are looking at last night's election results in Germany, Europe's biggest economy. Even though Britain is not part of the EU, that result significantly affects how Britain is going to be having a relationship with Europe over the next 4 years. I know there hasn't been an outright winner, but it does appear as if Olaf Scholz, the former finance minister, may indeed be running the country underneath some sort of coalition government. The smooth running of that election is why the markets are in positive territory, and the big oil giants, BP, Royal Dutch Shell, they're riding high. They're the leaders of the FTSE all share this morning, and that's because Brent crude is running at a 3-year high at the moment. So yes, green is the colour of the FTSE in London this morning, Jimmy.
Let's just hope that continues into the intraday. Thank you very much, Juliana.
Thank you.
Now let's take a peep into the crypto market this morning with Aladdin. Did I see green?
Yes, green is the color this morning across board. We have Bitcoin having that massive rebound from about 41,000. It's green across board, and it's a strong green we're having this morning, despite the China FUD over the weekend. Look at the fear greed index is still at still fear at 26 points. Well, it was agreed about just a few months ago, but now we're trading. The market is currently still in fear mode, but not extreme fear, which is good. Market cap, 1.96 trillion, still below the $2 trillion mark. It's up 5% this morning. 24-hour volume, $114.15 billion traded in the total crypto market. Bitcoin dominance inching up there, 42.34%. The crypto market is looking quite bullish this morning, with Bitcoin at $43,792 at 8 a.m. this morning. 24-hour volume traded in Bitcoin, $33.22 billion. Price of Ethereum staying steady above the $3,000 mark. It's $3,102 now, up 9.94%. $22.23 billion traded in Ethereum this morning. Let's look at the coin to watch there. Still have AFN there trading at 1 cent. Even though the market did see some massive hit, it's still trading at 1 cent, which is good. Top of the market cap, we have BNB, Solana up 6%, XRP still below $1. Let's bring in Lumide Additional now, financial market analyst. Hello, Lumide. Good morning.
Hello, Raji. Happy Monday.
Happy Monday. Happy Green Monday. Great to have you. Well, we see Bitcoin and a couple of altcoins having this strong rebound. What's driving sentiment?
Yeah, what we're seeing in the market right now is that the crypto market seems to be maturing. Don't forget that a couple of days ago, China retreated their crypto ban, and we saw Bitcoin pulling as low as the 40,000 mark. But impressively, Bitcoin, at the time we're talking, is trading above $43,000 mark. That should just to tell you that investors are looking past China and now focusing on the infrastructure bill coming in play some this time. You know, the United States are trying to tax crypto transactions. So that sometimes we try to create volatility, but I think the crypto market is adjusting, and we saw Ethereum going back above the $3,000 mark.
All right, so what's your outlook for Bitcoin and altcoins for the week?
Yeah, this week I'm more bullish on Ethereum and many NFT-backed blockchains because we are seeing transactions going into that area, and we are seeing institutional investors with the likes of MasterCard, Visa coming also into that space, and a lot of people aggressively going into NFT. So we are seeing that coins like Cosmos, coins like Solana, coins like Ethereum would always be investor delight, and I expect Bitcoin to remain above $40,000.
Okay, all right, Lumide, thank you so much. Enjoy the rest of the week. All right, so we have XRP, Cardano, all in the green. Top 5 gainers, we have Pep there. Massive 51% profit there. Sushi, $11, up 22%. So it's, Chimmy, it's looking green and really good in the crypto market this morning.
I see. For me, the major takeaway from what Olumide said there, market is maturing. That's good to know. And of course, his top pick, Ethereum there. What was that coin you talked about? Coin to watch? What was that again?
That's AFN blockchain. Yeah.
Why do you say that?
Because AFN right now is one of the laggards when it comes to the NFT space. So I'm watching that one. The price is still really cheap, just 850 million supply. So I have a high hopes for that one.
Maybe that will move since we're seeing Bitcoin move now, and of course Ethereum moving back above 3,000.
Yeah.
There. Okay, we'll keep watching. All right, that's it on the program. Thank you for watching, and don't forget to join us by 1:30 this afternoon on Business Incorporated for more updates on developments in the world of business. I'm Chimezie Obi Iwagu.